Hi guys, and welcome to Mentome's YouTube channel. And today we'll be discussing about private equity, and this has been probably a little bit misunderstood by students and a little bit of confusions as to how private equity actually works. First of all, and second of all, is what are the things that you need to be aware of to enter this industry, right? So let's start by not wasting any bit of time and discussing directly on what are we going to really discuss. So we're going to be discussing about what is private equity, just to understand not just the structure of the company on how it is formed, but the type of private equity investments that have happened. Also, trying to understand it in terms of the Indian context, right, and the reasons for growth. So we'll be looking at some statistics and some research reports which point us into how this industry has actually grown. Then we'll also look at the critical requirements to enter this industry, as opposed to just doing something. It's not really as simple as just getting a qualification, getting a skill, and then entering private equity, because that's not exactly how it works, right? Because private equity is like the special forces of investment research and investment fund management, right? Because the number of team members are so less, and hence the amount of opportunities are also less. But at the flip side, obviously, in terms of the compensation and in terms of the benefits, obviously it is way ahead than a general research based job, right? In the longer run, of course, right? And that's where we will talk about the candidate requirements and skills requirement, and probably how you can plan this out in the longer run, rather than just looking at it from the perspective of what you can do today and to get a job today. That's not how most of the things work, right? So let's understand. It's just a simple structure of managing investments, opposed to when we are talking about a mutual fund in which all the capital is getting merged into a single trust. Compared to that, in this case, private equity, you basically generally it's easier to form a limited liability company in which the main manager or the main guy who's going to manage these investments is called a general partner, because he's also one of the investors, but obviously he possesses that skill to actually find out companies, evaluate companies, and invest in them. And then you've got many limited liability partners in the form of a structure, and then obviously once the capital comes, then you've got many investments, right? Now the obvious reasons of structuring it like this is because there's always very easy to remove one partner and put in a new partner. And also the bifurcation of investments is much easier in an LLP structure, right? So that is the reason why it is actually structured, as opposed to just being trying to understand that, okay, this is how it is. Now, first of all, you need to understand also the fact that why does private equity actually exist, right? Now, let's consider two scenarios. One scenario is there's a startup company, it grows, it takes a lot of time, and then becomes into an IPO, right? Great. However, that and in fact that is how it used to happen pre 2000 to 2006, right? That's how things used to happen, because there are a lot of companies uh, used to get into IPO directly, and without having a chance of getting any private investments, right? Uh, On the flip side, you could also say that, okay, let's take the startup company, let's put in private investors first. So it's like a mini listing that has happened before the company grows or after the company grows, and then you go into an IPO. What does that do is that it gives a lot of capital flexibility and advantage to the private company, and it is able to scale up faster. It is able to focus on the product rather than just the survival, and that is what we're going to discuss, right? So how does it benefit? So first of all is it gives us more freedom in terms of pursuing or improving a product, as opposed to if you are starting it from scratch without any capital. It's going to be very difficult, because you will have to also think about operational expenses, you will have to think about salaries, you will have to think about the losses, because you have to survive, at the same time expand, right? So private equity obviously is a boon in terms of providing that incubation or survival or nurturing of these ideas which come up, right? So you will not see a lot of Amazons and Facebooks, and unless there was a game of private equity or funding of private equity going on, right? It provides them a network of investors, because see, as an entrepreneur, you might be focused on a certain division or a certain area of expertise, but when you have a private equity firm, you also get access to a lot more diverse aspects of strategy, or aspects of getting capital, which so that you can focus on doing business, and the private equity fund can help you in getting what you require to do that, right? So it's like a godfather behind you who's helping you to sustain. Otherwise, if let's say this was not happening, then the only companies which have a lot of capital and a lot of background would be able to succeed, and then you will not have a lot of entrepreneurship or growth in entrepreneurship in the longer run, because if capital is so difficult to get for an entrepreneur, more chances are that the larger companies with larger background will obviously have the monopoly, right? Also, it is good for the entrepreneur because after a certain level, risk is also diversified between the private equity investor and the entrepreneur himself, right? All right. So if you look at the history of private equity in India, right, specifically, you will see that in, let's say we're talking about 2002. So I've plotted a chart of 2002, and you will see that in 2002 there are about total private companies about 5,23,000, right? And at that time in NSC there are about 793 companies which are listed. All right. Compare that to 2022, there are about 6,800 companies which are listed in NSC, and around about doubling the size of the number of private companies in the market, right? Look at the number of listings which have changed over the years, right? If you see 2002, there are about 793 companies listed. In 2012, there are about 1646 companies listed on the NSE, and in 2020, there are about 2096. So the major growth has happened between 2002 and 2012, and then there is this gradual growth happening. Also, one of the reasons is also because 2006 and 2007 had a lot of, we had subprime crisis in the US, because of which a lot of capital was obviously restricted for the new investors coming in, right? Now let's look at the growth of private equity funds. I mean, if you see 1995, there are hardly any private equity funds. There are about 30, right? And if you see the same thing after 2000, there's a jump of up from all the way up to 75 private equity firms, all the way up to 300 private equity firms in India. And also look at the amount of investments, right? So out here you've got about 70,000 million dollars of investments, and in 2020 we have crossed many billions. Post the entire 2016 and 17 rally, right? So there's a steady growth of availability of private equity capital, which is fantastic in terms of the overall entrepreneurship growth in India, right? Now let's look at categories of private equity. Now I'm not trying to tell you the academic version of the various kinds of private equity firms, because then it becomes very academic and that's not really real. The correct categorization would be companies which focus on pure play, which means one line of business. For example, if you're talking about edtech, then there would be a private equity firm which is entirely focused on private edtech firms. There would be companies which are focused on e-commerce. There might be companies which are focused on technology companies. That is nothing but pure play. Okay. Then you've got infrastructure and real estate, which has always been the case. In the longer term, a lot of private equity firms in real estate developments. Also because of its limited life, you create and develop a project, and then you exit the project, right? So that's one way of looking at private equity in India, right? And also, if you look at in terms of why the fund is given, right? So you'll see a huge amount of money given to growth, which basically means the company is existent, the company is beyond the startup, it is sustainable, and now you provided more capital so that the company can grow further, right? Opposed to that is your color in this violet color, which is, you can see the startup funding, which is in terms of the deal size, of course, is lesser, but the amount of funding is, the number of transactions are very higher, right? So obviously the number of capital goes automatically into companies which are already proven technologies, or they have revenue, they have profitability, and now in order to scale, the entrepreneur is facing facing the capital crunch, and that is where the maximum amount of money is getting invested, right? Followed by obviously the buyout in the sense you're just taking the entire company, you're just buying the entire company, and you can clearly see that is exactly what is happening, right? If you see the same private equity firm which invested in Baiju has also bought in a lot of other companies. So followed by growth is obviously buyout, and followed by that, if you can see on the red side, is nothing but pipe. Pipe basically means private investment in public company. So there is no such restriction that a private equity company cannot invest in public equity as well, because the whole objective is to generate returns. So you would rarely see a private equity firm saying that we will not do this, because there is no such restriction, because it's finally an alternative investment fund, right? So credit investments are something new which has happened after 2017 onwards, which is nothing but giving or providing debt which probably can convert also into equity. All right, and you can see out here in the orange side, it has started coming after 2015 onwards, in which private equity also comes in terms of credit investments, in which because for a smaller company, the loans would hardly provide you, the banks would hardly provide you the loans basis the company's balance sheet, because you will have nothing, right? Because you're a smaller company. So even there, in fact, it is actually beneficial for the private equity company, because they get a fixed rate of interest, and later on it gets converted into equity. What more can you expect, right? At least you're getting something in return in terms of cash. In all the other cases, the expectation is another 5 years you will take the company public, or you will exit, and that's how you make money. But in terms of credit investments, the best part is that you get interest regularly, you get the cash flow, and plus you also get the equity stake, right? So that's the another way of categorizing the private equity investment strategy. So you could say that these are strategies, right? And in the previous slides, you can say in terms of the category of funds which are available, right? Now let's look at the sector. Now there is obviously a lot of sector, but one thing comes in common, right? Which is financial services, which is nothing but fintech, had a lot of investments in terms of private equity, e-commerce, and followed by technology. So these are the major plays, and this has actually not changed. I mean, since 2012, that whole dominance of private equity in these three segments has always been consistent, right? Now let's talk about the three traits that you need to have if you want to get into private equity. And when I say that the traits, I don't mean to say as an entry level job, or as a MBA fresher, because that's not how you look at this, right? First is, if you are an established analyst in a boutique firm, a smaller firm, for a long time with good performance, then that makes you a good candidate for private equity. At the time of graduation, if there are any internship opportunities which are there, those are also the places where private equity firms tend to hire, because they hire for a shorter period, and for junior roles. And third is, if you already have an existing PE experience, right? If you do not fall under any of these three criteria, there is a very less chance of you actually getting hired in private equity, and that's the plain truth, right? If you look at the compensation, and there's a reason for this, because if you look at the compensation, since we are talking about a limited size company and a higher deal size, obviously salary per unit is obviously a little higher, right? So if you see at an associate level, the minimum is about 35, and the maximum is about 50. Pre-MBA junior roles also range from 30 to 40, and at a senior associate level, it ranges from 0.85 at the minimum level to the maximum of 1.35 crores. So in order for you to be obviously eligible for such salary and compensation and perks, you will have to obviously work on these three things. So it's not necessary that you have to, and it will probably not be the case ever that you get into private equity as a first job. If you are, you're pretty lucky. That's good. Enjoy it. If not, then the best position, the best strategy is to pursue a general investment research, investment banking career, and then later on take that good experience. So you do well in your research and your investment experience, and then take that experience to shift into private equity if your interest lies. If there is no interest specifically in private equity, of course, it doesn't make sense at all, right? Now, the hiring cycles are categorized into two sections. One is it's generally on the cycle and off the cycle. On the cycle means basically it starts in October and the hiring is immediate, you get the job immediately. And off the cycle basically means that you've been shortlisted. You might get the job, or you might have to wait for a little bit of time before you actually get hired. So basically you tend to apply on the cycle only. It's nothing but a time period in which the hiring actually happens, right? Now the alternate route, okay, if you do not come from a premium MBA, have not done CA, have not done MBA, great MBA, then the idea is that you can go through the business development route and then try to shift into an analyst role. But of course, even at the business development role, the competition is going to be pretty high. So, that's just one of the, you can say a secondary option which is available if in case you want to get into this, right? Uh, Skills and qualification. Now, I'm not going to talk about the again, a quick fix qualification. You need to have a qualification which can give you a little bit of visibility. Okay, and I don't mean to say that qualification itself is going to give you that route or the success in private equity, but preferably even if you don't have an MBA tier one, you can always get a CFA charter. If you don't have a CA, you can always get a premium MBA, or even if you don't have neither, you can always just do CFA, right? So any of the qualifications, which just proves the fact that you are focused and you are hardworking, and it can just, I mean, you can just talk about something that you've done till date. Apart from that, you can say the more visibility is from proven experience. So you need proven experience, and that's what you need to work on. Once you get into investment research. So generally speaking, a lot of people will get into research and then they'll become complacent, and then they will just get stuck in the, because their idea was to just get into investment banking, right? But if you continue the momentum from there and keep learning and keep getting yourself into challenging work, then that gives you proven experience. And of course, in order to survive, you have to obviously keep on updating your learning skills like financial modeling. You need to have a good understanding. So in your proven experience, when you are in research job, any research job, you need to focus on understanding various businesses, and mostly it will not just be about reading investment books, but it will be reading about businesses. You need to be ahead of the game. You have to think like an entrepreneur. If you were to come up with another idea, what would that idea be, right? So that's how you need to think. And of course, you can't do any of this if you don't have communication in terms of the interpersonal skills, right? Your ability to influence, your ability to make people listen to you, right? So that's short video on private equity. I hope you understood the concept. I hope things are a little more clearer, and best of luck with your career, and I will come back with another career guidance video next week.